Hey guys, welcome back. In today's video, we are talking about why you should get ready for AMC, why it's going to be the biggest year, the offshore shares, and many more in this video. Firstly, we're taking a look at this from Adam Aram. Here are just some of the many appealing 2025 movies. Our thoughts at AMC are that this will be a powerful year for the size of box office grosses. 2025 should be the biggest box office year since 2019. May that prove to be so, which indeed will make this a happy new year. So when you take a look at the lineup for 2025, instantly we're looking at movies that will very likely, of course, have very good box office numbers. Now, we've already talked about this year that even though we've been affected by the strike, the AMC average is obviously the box office average is actually doing very, very well. So if next year we're able to see the quantity, because the quality is already up there, so if we're able to see the quantity of movies that are being released, not only are we going to be getting movies that is going to be doing insane numbers, we'll also get movies that are regularly just doing consistently good numbers, and therefore the box office will be better. And if that will be the case, then you can see how AMC is obviously going to benefit from this. And you can see how AMC is positioned. Movie theaters and IMAX are positioned well for 2025. AMC Theaters owns 50% of all IMAX theaters in US. Retail investors owns over 90% of AMC stock, and cite that AMC is breaking all kind of records in its 103 years. So when you take a look at the business structure of AMC in the US, we know that it's doing very well. Obviously, AMC has theaters outside of the US as well, but when you just take a look at in terms of the business structure within the US, you know it's very powerful. It's obviously the biggest in the US. Whilst the market value, whilst the price obviously doesn't reflect that, because we know in terms of the institutional ownership are all in IMAX, are in Cinemark and not AMC. That's the reason why we don't see its true value. We know that fundamentally AMC is doing well. When you take a look at the fundamentals, we know that AMC is obviously doing well. We've seen the record-breaking EBITDA, we've seen the concession sales, we've seen how the attendance is obviously doing very well, and so all in all, AMC is doing well. And like that's what we said, pairing this up, pairing with what we've seen this year, with how AMC has improved fundamentally, and pairing with how going into next year, the box office is going to be extremely big, you can see how AMC will be having the biggest year next year. And this is why everyone needs to get ready for AMC. Now, furthermore, and a reminder, and I think it's very important, especially with what we're about to get into, is reminder from 2021, companies don't recall shares, lenders do. Now, one of the things that is definitely going to be talked about is that if we're seeing and predicting that AMC is going to be doing well in 2025, does that mean that they will recall shares? Firstly, we have to understand is that AMC doesn't have the power to recall shares. The lenders do. The brokers, the people who are lending out the shares, they have the ability to, not AMC. But what we have to understand is that if AMC were to continually performing at this rate, if that AMC were to obviously continuously performing well, then it would actually force the lenders to obviously recall the shares. And it's very important because AMC doing well fundamentally, and if AMC is able to do even better than what the consensus is, then we're going to be seeing a lot more new investors coming in. We've talked about it yesterday, and we'll briefly talk about it later on in this video, in terms of the regulations, the limitations that will be on the market manipulation, on the short selling. And so very likely going into next year, we are going to be seeing more price discovery. Whether it will be 100%, it's obviously still unknown, but it's very likely to be seeing a more real price discovery for AMC. Pair that up with the fundamentals we're going to be seeing, then you can see how AMC's price will rise, and with it rising, how it will obviously recall the shares from the short sellers. Now, this is something that we talked about yesterday. So, effective today, FINRA has just implemented new short selling regulations, indicating that any fund that has over $10 million or 2.5% of shares shorted will have to file a regulation show form. And so, huge red flags come into play here, since there are many ways to hide short interest via regulatory arbitrage. Now, the reason why I want to talk about this, and this is something we covered yesterday as well, is obviously talking about we're seeing more rules, we're seeing more regulations in terms of trying to bring more transparency and equalness in the market. Now, obviously with this particular thing, there will be loopholes, there will be other ways for them to try and bypass this, but nevertheless, it's the fact that if they are doing this, we are seeing the effort. Now, of course, it needs to be more detailed, but one step at a time, and the very fact that we are seeing something should already be a good thing, even though, again, like we talked about, it could obviously have been done better. But when you take a look at, some of the things that's obviously happening, firstly, we talked about this. With this, we're likely to be seeing a, truer price discovery. But when you understand, why this will lead to a price discovery, and in terms of understanding what they're doing, you have to understand everything that's obviously ongoing. And this is something that we can obviously correlate with what we just talked about. And this is how shipping orders overseas to foreign exchanges, the total notional value for single-sided equity trades. And you can see that single-sided non-UK was at 6.3 trillion, where single-sided for UK was $839 billion. And it comes to a total where we're seeing at 7.2 trillion notional value. So this is what we're talking about in terms of going overseas. When we're seeing these orders, when we're seeing shares that are, of course, outside of US, these shares don't have to be reported. And it's very likely that what we're going to be seeing here is that we're seeing an increase in overseas shares. Firstly, what that means is, of course, they are obviously trying to bypass this. But we've talked about how this is obviously going to be costly to them. But also, one understanding is that regulations in Europe is actually more strict than it is in the US. And so with them trying to bring more shares into Europe, we could be seeing the limitations there as well. Now, when we go into the details, it will obviously be ways for them to try and bypass this. They will try and find loopholes. But what we could be seeing is the increasingness in terms of difficulties, in terms of the challenges for these firms to try and play the same tricks they have been doing. And that itself is obviously very good for us when we see that it will cost them more capital, because at the end of the day, if they were to run out of liquidity, whether it be the brokers, whether it be institutions, it will just be a matter of, the brokers recalling shares or the institutions covering shares. Something to know, all trades are not specific to AMC and GME, that this is just a very broad general. Now, also yesterday, we talked about the fractional shares. And the reason why it's important is that you can see here, we find that high-priced stocks, meme stocks, IPOs, SPACs, and popular retail stocks exhibit considerable numbers of these tiny trades. And so you can see how, in the yesterday, we talked about the list. AMC and GME was in this list. But you could also see how AMC and GME are, of course, the targets of this, because firstly, you can consider that they come under as meme stocks. Secondly, popular retail stocks. And so this is what we talked about. When you talk about why AMC is at its price, and people saying that AMC should deserve, the price it's at $4.02. But when you understand everything that's ongoing, when you're seeing that all of these methods that are being used, which could manipulate and suppress the price, and they all contain AMC and GME, how could it possibly, reflect that AMC's price is real, that AMC's price is true? We've known that it's because it's met with constant suppression, constant manipulation, and this is just a showcase of it. And another thing to understand is, Citadel Securities fined $700,000 by FINRA in July for trading ahead of customer orders. They delayed certain equity orders from clients to buy or sell shares while continuing to trade the same stock in its own account as part of its market-making activities, according to FINRA. So, just another way of manipulation. And again, this is why we said, why market makers obviously suppress the price, why AMC doesn't see its real price, why when you buy into AMC, it could obviously be rooted internally, it could be rooted into the dark pool, and all of that just so that it doesn't actually positively affect the price. Now, 700,000. I encourage anyone to take a look at the profits that Citadel supposedly made. Now, we could obviously talk about how, because of the amount of short positions they've made, these profits aren't real profits. But you can obviously take it in terms of comparison. When you understand that the profits they are making that are in supposedly the billions, a $700,000 fine isn't obviously going to affect them. And that's why we talked about the fines needs to be more strict. It needs to have a harsher consequence. And then when we see that, that is what will have an effect for the fairness. That's what will bring, of course, equality in towards the market. Now, another thing, we talked about this in terms of how the SEC is now receiving so many requests to see the real GME failure to deliver data. And we talked about how they talked about it could, in terms of bring unforeseeable harm. And what we could see is it's an admission by the SEC of their failure to properly protect market participants. By allowing massive numbers of unsettled FTDs, the SEC is culpable for the potential harms, the lack of transparency of the complicit behavior, again, favors some client over retails shame. And again, just another showcase. Like we said, we need more transparency, we need more fairness. Right now, the regulation isn't bringing this. Luckily for us, SEC chair is obviously going to be stepping off. We're going to be seeing new admissions. We're going to be seeing a new, potentially someone who will bring fairness in towards the market for the retail. And that's ultimately what we want. And you guys, thanks for watching the video. I'll catch you guys next time.